Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at euro currency. So you can see that on Friday market has made an attempt to show the bounce up from this support area, although actually the session has become mostly inside one to the Thursday. And well, this performance doesn't look really rational in the current situation. So with the fundamental background that we have currently, the performance of the Great British Pound currently seems more reasonable, and it's actually, we're not really very inspiring with the possible bullish performance on the euro currency, especially after today's weekly report, where we have considered recent data that we've got this week and the new inputs for an analysis of the European economy, United States economy. We are not finished yet, so on the gold report tomorrow we will proceed with this and take a look at the budget deficit and some news that stands around it in the United States. But already now, based on the report that we have prepared today, we could say that divergence between the European Union policy, as in terms of the rate, as in general economic conditions in the United States, will keep widening. And that brings some really gloomy perspective for the euro. And recent performance that we see here, we think that probably might be temporal, and in the nearest term, chances that euro currency will continue bearish action with some acceleration down looks really significant. Meantime, you can see that on Friday we haven't got any grabber, so market has not tested the MACD predictor line, but since it stands relatively close, we could get it, for example, on Monday or Tuesday. Speaking about the current technical situation, for truth's sake, it was to say that the appearing of the grabber here, it's not quite natural. So, and it was not really in a row with the overall situation that stands in Europe, in particular in the United States as well. So we should be really careful with this, but purely based on technical picture, we will not ignore it and we'll try to use it if it will appear in the nearest time. So on the 4 time frame chart, the only one thing it's worth to mention here, yes, market is trying to show the breakout of this channel, but what's really important, at least for the beginning of the next week, this will be lows right there. Why they're important? Just because, well, based on some candlestick patterns that you see here around it, it might be important. So when it's some combination of the doji performance and then reversal upper direction, so it puts some background for bulls, at least on the intraday charts. But if you once again will take a look at the daily chart, you could see that these lows actually is a break even for the daily trend direction. So for now, at least nominally, we could speak about the bullish context and speak about some bullish patterns, bullish strategy and scenarios. But if market will break down this area, we will lose even theoretical reasons for that, because daily trend will turn bearish and we will not get any reasonable background for discussing any new bullish positions. So it means that from a technical point of view, until market stands above these lows, we could at least theoretically discuss the possible bullish context and bullish patterns. So, and these thoughts leads us to hourly chart. After the drop, market slowed down a bit, and take a look. It started forming kind of the hand and shoulders pattern. So the risk factor here exists because XOP is not completed yet, And if we once again recall the fundamental background, it's really not small risk that market really could proceed lower, and actually bullish potential patterns might be not formed or even fail. So risks for that is really high. But currently, we could just keep watching what will happen on Monday. If market will complete this hand and shoulders, start reversing action, we will get, for example, grabber on Monday. We could try to do something on the bullish side if all this stuff will be formed. But as I said, fundamental background stands against it, and really big chances that these patterns will be either not formed or just will fail later. That's why everything that we said right now about the bullish context, it is also could be applied for the same degree to the bearish one. So if we will see that market either fails to form the hand shoulders, or after forming start dropping lower back to the lows, forming the failure of this pattern, this will play in favor of the bears. And in this case, once the lows will be taken out and trend will turn bearish, this increases chances that this market just will keep going back to the lows 1, 1 or 3 area. But this time, hardly it will stop there. It's more probable that we just will get the downside continuation through these lows. So that's approximately the scenario that we have for the next week. Just to keep it short, we're starting from the bullish side. See what will happen here with the possible grabbers, with the possible hand shorts on hourly chart. If everything stands okay, we carefully could try to use it and trying to trade it. If market starts forming some bearish signs or inability to complete the bullish patterns, this will be treated as the signs of the weakness. In this case, the bearish patterns and bearish positions will be our preferable ones.